All right, buckle up, everyone, because today's deep dive is going to take us right into the heart of the blockchain world. We're looking at Wolfer Finance, and let me tell you, they're not shy about claiming they do it all. We've pulled a whole bunch of info straight from their website, pages like About, Services, Regulation, Crowdfunding, all that good stuff. And our goal, well, it's pretty simple, really. We're going to figure out what Wolfer Finance actually does, what makes them different from all the other players in the Web3 game, and most importantly, we want to know if any of this stuff even matters to you.
It's a wild world out there, that's for sure. And Wolf for Finance, they definitely seem to be right in the thick of it. I mean, right off the bat, they're talking about giving folks access to, and I'm quoting here, expensive, technical, and high barrier to entry products. Stuff like master nodes, validator nodes, digital currency mining. They even throw around this phrase, multi-billion-dollar network.
Yeah, they're not holding back on the blockchain buzzwords, are they?
Yeah.
But let's back up a sec. For those of us who haven't gone down the crypto rabbit hole, can you break down why things like masternodes and mining are usually out of reach for the average Joe?
Absolutely. So think of master nodes like specialized computers. They're the backbone of a blockchain network, keeping everything secure and making sure transactions go through smoothly. But here's the catch. Setting them up and keeping them running, well, it takes a lot of technical know-how. Not to mention a serious chunk of change up front. Mining, that's a whole other beast. It's basically a race to solve crazy complex math problems, and the winner gets to add a new block to the blockchain. But you need specialized hardware, tons of electricity, the whole shebang. It's resource intensive, to say the least.
So it sounds like both masternodes and mining are kind of like the VIP section of the blockchain club.
You could say that.
Yeah.
It's mostly institutions and folks with deep pockets and tech skills who get to play in that arena.
Okay, so that brings us back to Wolfer Finance. How are they claiming to change the game? What's their secret sauce that supposedly makes these things accessible to, well, the rest of us?
That's the million-dollar question, isn't it? This About page doesn't really give us the full picture, but I'm going to take a stab in the dark here. It might involve some sort of shared ownership, like maybe they're pooling resources so smaller investors can get a piece of the action. Later on, they mention owning and operating nodes across different blockchains, so maybe that's part of it.
Interesting. So we're going to have to dig a little deeper into their services to see how that all works. But before we do that, I want to talk about the guy behind all this, Drew Wolfer. The About page, it's basically a highlight reel of his achievements. Other companies he's founded, media appearances, they even call him a YouTube and media influencer. So is this just your standard self-promotion, or is there something more going on here?
Well, it's definitely common for companies to showcase their founders' credentials. But the way they're playing up Drew Wolfer's personal brand, it does make you wonder, how much of Wolfer Finance's success, or perceived success, is tied to his individual reputation?
Yeah, good point. It's something to keep in mind as we go through all this. Now let's get to the nitty-gritty, what Wolfer Finance actually does. And their list of services, let me tell you, it's a mouthful. Regulation as a service, consulting and advising, business development, executive team agency, marketing and fundraising, media management, even software as a service.
It's like they took every business service under the sun and gave it a Web3 makeover. Some of it, like the consulting and business development, that's pretty standard stuff. But then you've got things like regulation as a service that's definitely more unique to the blockchain world.
It begs the question, are they truly innovating, or are they just putting a shiny new blockchain label on old school ideas? One thing that caught my eye, and I'm curious to get your take on this, is their business development as a service. They talk about this hands-on approach, working inside your company, contributing sweat equity. They even highlight a case study where they built an entire sales team for a client. Is that something you typically see in the consulting world?
Honestly, not really. Most consulting firms, they operate at a much higher level. They give advice, make recommendations, but they leave the actual execution up to the client. This whole sweat equity model, it's way more involved.
Yeah, it's a bold claim, that's for sure. And it makes you wonder, how do they even measure success in those situations? Speaking of bold claims, they also talk a lot about the whole regulatory wild west of blockchain. They even quote the Deputy U.S. Attorney General on their website, basically saying, hey, if you're operating in the U.S., you got to play by the rules no matter where you're based. And it seems like their regulation as a service is their answer to that whole issue.
It's definitely a hot topic. We've talked about master nodes and mining, but the world of digital securities, that's another can of worms entirely. These are digital tokens that can represent ownership in a company, kind of like stocks. And regulators, they're starting to take notice.
So is Wolfer Finance basically stepping in to help companies navigate this whole legal minefield?
That's the idea, yeah. They say they got this network of lawyers, accountants, even a third-party regulated digital security token issuer, all to help companies launch blockchain products and services that are, by the book.
Makes sense. So they're trying to be the go-to guys for all things regulation in the Web3 world. Now let's talk about their marketing game. Because on their media management services page, they drop some pretty eye-popping numbers. They claim to have access to a network with over 10 million YouTube subscribers and 10 million Twitter followers. They even name-drop some big-time Web3 influencers. Are we supposed to be impressed by this?
Well, I got to say, those numbers are definitely attention-grabbing. But here's the thing about online metrics. They don't always tell the whole story. You could have a million followers, but if they're not engaged or relevant to your target audience, it doesn't really mean much.
Right. Having a million bots follow you on Twitter isn't exactly a sign of success. And speaking of taking things with a grain of salt, on their marketing and fundraising services page, they mention having access to publications like Forbes, Entrepreneur, The Wall Street Journal. Should we be taking that at face value?
It's definitely possible they've got some connections there.
Yeah.
But I always say it's better to be cautiously optimistic with claims like that. What would really convince me is seeing some concrete evidence, like show me a track record of successful media placements, then we're talking.
Fair enough. So let's shift gears a bit and take a peek into Wolfer Finance's own investments. Their treasury page lists a bunch of different assets: Ethereum and AVX validator nodes, FLUX master nodes, even ownership in a company called PreSend.io.
So this is where we start to see how they're actually putting their money where their mouth is. Ethereum and AVX validator nodes, those are essential for keeping those blockchains secure, like we talked about earlier. FLUX master nodes probably serve a similar function on the FLUX network. These are infrastructure investments, showing they're not just talking the talk, they're walking the walk.
And then there's that 10% ownership stake in PreSend.io, which they describe as, get this, revolutionary, patent-pending wallet transaction security software.
Sounds pretty high-tech.
Yeah, but it's also a bit of a mystery. We know it's related to wallet security, but beyond that, it's hard to say what it actually is or how valuable it might be.
Right. Is it truly groundbreaking, or is it just another tech solution in a crowded market?
So to sum it up, it seems like Wolfer Finance is trying to play multiple roles at once. They're offering traditional business services, but with a Web3 twist. And they're actively investing in the blockchain space themselves.
A multifaceted approach, that's for sure.
But the big question remains, are they really bridging the gap between complex blockchain tech and the average person? Or are they just capitalizing on the hype?
That's the question we need to keep asking as we go deeper. We've got a lot of information to sift through, and we need to separate the substance from the buzzwords.
Well, I'm definitely intrigued, and I'm sure our listeners are too. We've only scratched the surface here, so stay tuned as we continue our deep dive into Wolfer Finance. We'll explore the potential risks and rewards of their approach in more detail next time.
Wolfer Finance, it's like they're trying to walk this tightrope, promote accessibility to blockchain, but at the same time, they got to acknowledge those inherent risks that come with it.
It's a tricky balance for sure, and that's where we got to put on our critical thinking caps. They're basically saying, hey, we can open the doors to this exclusive world for ya, but as informed listeners, we got to ask ourselves, at what cost? And is it even the right fit for me?
Exactly. Let's circle back to their regulation as a service for a sec. It's a clever idea, right? They recognize that the legal side of blockchain is constantly changing. That's a minefield out there, especially for startups who are just getting their feet wet. But the question is, how effective are they really at navigating this whole mess?
Yeah, that's a good point. They mention having access to lawyers, accountants, third-party regulated digital security token issuer, but just having access, that doesn't guarantee success. I'd love to see some hard evidence, How many companies have they actually helped get through SEC regulations? What were the outcomes? That's the kind of stuff their website doesn't really address.
And even if they are successful, compliance ain't cheap. Legal and accounting fees in the blockchain world, those can be through the roof. Wolfer Finance doesn't mention pricing anywhere on their website, so that's definitely something potential clients need to think about.
And let's not forget, regulation as a service isn't some magic bullet that eliminates all risk. The blockchain world is still relatively new. Regulations are constantly changing. There's always the possibility of some unforeseen legal challenge or some change in the regulatory landscape that could catch companies off guard.
Exactly. They might be able to help companies meet the current requirements. but they can't predict the future. That's a risk anyone entering the blockchain space needs to be prepared for.
Okay, so let's switch gears a bit. Let's talk about Wolfer Finance's direct involvement in blockchain projects, like those validator nodes and master nodes they list in their treasury. On the one hand, it shows they're putting their money where their mouth is, right? They're not just talking the talk, they're walking the walk.
True, but it also exposes them to the volatility of the cryptocurrency market. The value of their holdings can go up and down like a roller coaster. And there's always the risk of technical issues, security breaches, that could impact their investments and potentially the investments of their clients.
You mentioned the volatility of the crypto market. Can you elaborate on that a bit? What are some of the things that can cause those dramatic price swings you talked about?
Sure thing. Cryptocurrency prices, they're influenced by a whole bunch of factors. Supply and demand, obviously, regulatory news, technological advancements, even social media sentiment can play a role.
Yeah.
For example, let's say a major government makes a positive announcement about blockchain adoption. That could send prices skyrocketing. On the flip side, news of a security breach on a popular exchange could trigger a massive sell-off. It's a market that's super sensitive to news and speculation.
Makes sense. So it sounds like investing in cryptocurrency, even through a company like Wolfer Finance, it's not for the risk averse.
Absolutely. It's a high-risk, high-reward game.
Okay, let's go back to that 10% ownership stake in PreSend.io for a minute. The revolutionary patent-pending wallet transaction security software. It's definitely interesting, but it's also kind of a black box. We know it's related to wallet security, but beyond that, it's hard to assess its value or potential.
Right. Is it truly a game changer, or is it just another tech solution in a crowded market? And how does this ownership benefit Wolfer Finance's clients? Are they offering access to the software? Are they using it to enhance their other services? The website doesn't really give us any answers.
It almost feels like they're mentioning it more for the cool factor than actually explaining its relevance to their overall offerings.
It's possible they're just trying to impress us with their tech savvy.
Okay, let's circle back to those marketing claims. Millions of YouTube subscribers, millions of Twitter followers. You made a good point earlier. Follower count doesn't necessarily equal influence. So how can our listeners cut through the hype and figure out the real value of this network?
It's all about asking the right questions.
Yeah.
Who are these followers? Are they actually engaged? Do they even care about blockchain? A million followers who are bots or have no interest in this space, they're not going to do much for a company trying to reach investors or Web3 businesses.
Right, it's got to be the right audience. Shouting into the void isn't a very effective marketing strategy.
Exactly. And even if those followers are real and relevant, there's still the question of conversion. Just because you have a large audience doesn't mean they're going to open their wallets. It's not just about reach, it's about impact.
So what are some ways companies can prove that their marketing efforts are actually leading to tangible results?
Well, there are a few key things to look at. Engagement, for one. Are people interacting with their content? Are they sharing it, commenting on it, clicking through to their website? Then there's conversion rate. Are those followers actually turning into leads and ultimately paying customers? And finally, there's ROI. Return on investment. Are those marketing efforts actually generating a positive return for their clients? Those are the kinds of questions potential clients should be asking Wolfer Finance.
I'm still a bit skeptical about that whole access to publications like Forbes, Entrepreneur, and the Wall Street Journal thing. Sure, maybe they've got some context there, but can they actually guarantee placements? And at what cost? Again, those are details they don't really provide.
It's a valid concern. And it's worth noting that even positive media coverage, it's not a guarantee of success. A glowing article in Forbes might create some buzz, but it doesn't mean the company's product is actually good or that their business model is sound. Media coverage is just one piece of the puzzle.
So it seems like Wolfer Finance is a bit of a mixed bag. They've got some intriguing offerings, especially their focus on regulation and their involvement in blockchain projects. But their website, it's heavy on the buzzwords and light on specifics.
I agree. They've definitely piqued our interest, but they haven't fully convinced us. It's up to each listener to decide whether Wolfer Finance is the real deal or just another company riding the hype wave.
That's a great way to put it. And speaking of navigating the hype wave, let's move into the final part of our deep dive. We'll explore some potential red flags and offer some advice for listeners who might be considering Wolfer Finance's services. Stay with us, there's more to uncover. Okay, so we've covered a lot of ground with Wolfer Finance, but before we wrap things up, let's put on our detective hats for a minute. See if we can spot any potential red flags. Those little details that make you go, maybe I should do a little more digging before I jump in.
One thing that jumps out at me is, well, they can be a little vague sometimes,
Mm-hmm.
especially when it comes to their network and connections. They throw around phrases like multi-billion-dollar network, top professionals, key executives, but they never really name names or give concrete examples.
Yeah, it's like name dropping without actually dropping any names. Trust us, we know all the right people, but they don't really give you a reason to trust them.
And that lack of specifics, it kind of carries over to their track record, too. They talk a big game about Drew Wolfer's accomplishments, which, don't get me wrong, are impressive. But what about Wolfer Finance as a company? How many clients have they actually helped? What kind of returns have they generated for their investors? We're left to fill in the blanks, and that's never a good sign.
It makes you wonder if they're leaning a little too hard on Drew Wolfer's reputation to prop up the company.
Right, like is Wolfer Finance strong enough to stand on its own 2 feet? Or is it too dependent on his personal brand?
And speaking of investors, let's talk about that regulated crowdfunding offering information page again. It's great that they're transparent about the process, but it also highlights the risks that come with investing in early-stage companies, especially in a volatile market like blockchain.
Regulation crowdfunding, it's meant to open up investing to everyone. But it also means that everyday people can end up putting their money into ventures that are, well, pretty risky.
And while the SEC provides some oversight, it doesn't guarantee success. Investors need to understand that they could lose their entire investment.
It's not about getting rich quick. It's about making informed decisions.
So for our listeners out there who might be thinking, hey, Wolfer Finance sounds interesting, maybe I should check them out. What are some key questions they should ask themselves before taking the plunge?
First things first, figure out what you actually need. Are you looking for consulting, investment opportunities, help with regulations? Once you know what you're looking for, then you can start evaluating whether Wolfer Finance is the right fit.
And don't be afraid to ask tough questions. Demand specifics. Ask for proof of their track record, client testimonials, evidence of their network's reach, clear pricing information. Don't get swept away by buzzwords and vague promises.
Actions speak louder than words, right?
Yeah.
If they can't back up their claims with solid information, that's a big red flag.
Absolutely. And another thing, do your own research. Don't just rely on their website or marketing material.
Yeah, look for independent reviews, news articles, community discussions. Get a well-rounded perspective.
And most importantly, approach everything with a healthy dose of skepticism. The blockchain world is still the Wild West out there. There are plenty of players who are more interested in making a quick buck than building something sustainable.
Trust your gut instinct. If something doesn't feel right, walk away.
So, is Wolfer Finance the real deal? Are they a legitimate bridge between blockchain and everyday investors? Or are they just riding the hype wave? We've given you the information, now it's up to you to decide.
Knowledge is power, especially in the world of blockchain.
Keep asking questions, keep learning, and keep diving deep. That's the best way to navigate this exciting but often complex world. Thanks for joining us on this deep dive into Wolfer Finance. We hope you've surfaced with some valuable insights and a renewed sense of curiosity. Until next time, happy exploring.